You ever get that, like, mini adrenaline rush when you find a little extra cash, like, tucked away in a pocket or something? Maybe score a really generous tip.
Oh, yeah, definitely. That little found money feeling.
Right. Well, buckle up because we're diving into something that could totally change how you view those tips. Specifically, how they get treated by, well, the tax man. It's all about Senate Bill 4621, the, wait for it, No Tax on Tips Act.
Catchy title for sure. And for all of you out there who, like to cut to the chase but still get the full picture, we're going to break down exactly what this bill is trying to do, who might feel the impact, and some of the, honestly, super interesting, even a little quirky implications that pop up when you zoom in on the details.
Totally. So today's mission, you ready for this? We're nailing down the core of this No Tax on Tips Act. We've got the bill itself, plus some sharp analysis to help us out. What's the big idea here? Where's the potential upside? And, just as important, are there any potential hangups? Things that could get a little messy?
Messy is a good word for some of this, for sure.
Yeah, we'll get to that. But first, let's get back to basics for a sec. What's the gist of Senate Bill 4621? What's it trying to accomplish?
Okay, so at its heart, Senate Bill 4621 wants to rewrite the IRS rules, the Internal Revenue Code. The goal is to basically make cash tips free from federal income tax.
Oh, really? Like completely tax-free?
Yeah, that's the idea. And the way they're proposing to do this, they want to create a whole new deduction. So if you're someone who gets cash tips, that amount could come right off your gross income before you figure out what you owe in taxes.
Okay, so to make sure I'm getting this straight, say someone earns, I don't know, $60,000 in their regular job, plus another, let's say, $6,000 in cash tips that they've properly reported. They could subtract that whole $6,000 when calculating their federal income tax.
Bingo. You got it.
That sounds, well, pretty significant.
Oh, it definitely could be for a lot of people, but, and this is a big but, there's a catch, or I guess you could say a requirement. Those tips, they got to be reported to the employer, officially. The bill actually specifically points to this section of the tax code. It's section 6053A, and that already requires tipped employees, if they get $20 or more in tips in a month, to report those tips to their boss. So it's not about like going under the radar, right? It's about keep those records straight and then boom, you get to take that amount off for your federal taxes.
Okay, that's an important detail for sure. Now, our analysis says this deduction, it's an above-the-line deduction. What does that even mean in plain English?
Oh, good question. So above the line, what that really means is it's super easy to claim, even if you're not itemizing all your deductions. So whether you take the standard deduction, the one most people use, or you go through the whole shebang of itemizing everything, this deduction for cash tips, well, assuming the bill passes, it's yours to take.
That's pretty straightforward then, sounds like. So if this does become law, when would these changes kick in?
So the way the bill's written right now, it says it apply to taxable years that start after December 31st, 2024, which if you think about it, means it wouldn't really show up on your tax return until early 2026 for that 2025 tax year.
Ah, so not immediate.
Right, not right away. Plus, there's a note in the bill that the Secretary of the Treasury, they'd have to update how income tax is withheld, to make it all work with this new deduction. So we'd probably see some new instructions from the IRS, maybe some changes to those W-4 forms everyone loves.
Okay, interesting. Now, you keep saying cash tips, like that's a specific term, and our analysis points that out too, especially that link to that reporting rule we talked about. So what exactly counts as a cash tip here? Could that create some weird differences in how different tips are treated, do you think?
Ooh, you're picking up on something really important there. The bill itself, it doesn't define cash tips super clearly, but that tie-in to section 6053A, it's a strong hint. It's probably talking about tips you get literally in cash and then report to your employer. But here's where things get a little, well, fascinating, I guess you could say.
Oh, I'm intrigued. Lay it on me.
So think about it. These days, so many tips aren't cash at all, right? They come through credit cards, debit cards, those apps on your phone. This bill, it only talks about cash tips. So you could end up with a situation where cash tips get this special tax advantage, but tips you get electronically, they don't.
Huh. That does seem like it could create some odd incentives.
Exactly. Like, could it nudge customers to tip more in cash? Maybe. And it definitely creates a potential difference in how the tax rules treat workers, just based on how they get their tips.
That's a pretty interesting wrinkle. Now, whenever there's talk of changing tax rules, you know what always comes up. The possibility of people, let's just say, getting creative, right? Try to bend the rules a little, maybe a lot. And our analysis definitely flags this potential for abuse and loopholes. That's a big concern with this No Tax on Tips Act. What are the big worries, the things people are really concerned about?
Yeah, so the biggest concern is this bill could create a huge incentive for people, businesses too, to try and relabel their income. Think about it. If cash tips suddenly become federal income tax free, it's tempting to start calling other stuff tips, right? Wages, salaries, maybe even service charges, anything to avoid those taxes. And we're not just talking restaurants and bars here. This could spread to retail stores, salons, anywhere someone could make a case that a payment's a gratuity.
That sounds like a logistical nightmare for the IRS. Aren't they already stretched thin?
Oh, absolutely. The IRS is already dealing with what they call a tax gap, meaning there's a lot of taxes owed that aren't actually being paid. Now imagine trying to audit and enforce the rules, making sure income's classified correctly. When suddenly tip becomes this magic word for avoiding taxes, it'd be a huge challenge to sort out genuine tips from, let's be honest, disguised wages. And what's interesting is the very first versions of this bill, from what we've read, they didn't have many protections against this kind of, let's call it, creative accounting.
So no safeguards. That seems, well, a little risky.
Yeah, you could say that. But here's the thing. The latest version of the bill, it looks like they're trying to address some of these worries.
Oh, how so?
Well, our analysis mentions that they're considering a $25,000 annual cap on the deduction. And there's also talk about limits tied to your job and how much you earn overall. Those sound like potential solutions, right? So what do you think? How could those things help prevent abuse?
I mean, a cap makes sense, right? It kind of puts a ceiling on how much anyone could benefit from this. Like, it wouldn't make sense for someone making, a ton of money to suddenly try to claim most of it as tax-free tips.
Exactly. So that $25,000 cap, it's clearly aimed at those higher earners, trying to limit how much they could benefit and therefore how tempted they might be to, let's say, get a little too loose with labeling their income. The other ideas, those limits based on your job and total earnings, those are fascinating too. We don't have all the specifics from our sources, but it seems like the goal is to make sure this benefit really goes to people in those classic tip jobs, right? And that there's some kind of upper limit based on your income so people who are already earning a lot can't just exploit this. What's really interesting is those earlier versions of the bill, they didn't have these limits. So it definitely seems like people are starting to realize, okay, we need some guardrails here.
It does show that, they're at least paying attention to some of the potential pitfalls here.
Okay, so we've talked about loopholes. Let's shift gears a bit. Who are the people this is really meant to help? And are there folks who might not see much of a difference, even if it passes?
Right, good point. So the most obvious winners, the people who would directly benefit, are tipped workers who are already paying federal income tax. Because if they can deduct their cash tips, well, their taxable income goes down, which means a smaller tax bill, and that's more money in their pockets. And just to give you a sense of scale, we're talking about estimates are somewhere between 4 and 4.9 million people working in those classic tip jobs, servers, bartenders, folks who work in salons, you name it.
Wow, that's a lot of people. But there's this one statistic from our analysis that really jumped out at me. It said that in 2022, something like 37% of tipped workers, their incomes were already low enough that they weren't paying federal income tax. So for those folks, this wouldn't change anything, right? They wouldn't see any direct benefit. That's a really important point. You're absolutely right. If you're not already paying federal income tax, then making your tips tax-free doesn't really do much for you. And this is where things get, well, I guess you could say a little complicated.
Yeah, how so?
Well, you see, the median weekly wage for tip workers last year, in 2023, it was way lower than for workers who don't get tips, which tells us a lot of these folks, they're in lower income brackets. So while this bill is being presented as this big help for all tipped workers, the reality is the financial benefit, how much you actually save on taxes, it probably depends on how much you're making in tips. The folks who earn more in tips, they're probably going to see the biggest tax reduction.
That makes sense. The more you make in tips, the more you could potentially deduct. But it also means, like you said, not everyone would benefit equally. And our analysis mentions that there could even be a negative side effect for those with lower incomes. It has to do with other tax benefits, like the Earned Income Tax Credit, the EITC, and the Child Tax Credit. Could you explain how this tip deduction could potentially mess with those?
Oh yeah, that's crucial to understand. Those credits, the EITC and CTC, they're often tied to how much earned income you report. So if part of your income, your tips, suddenly become non-taxable because of this deduction, well, your reported earned income could actually go down. And if that happens, it could shrink the amount of EITC or CTC you qualify for. So in some cases, you could actually be worse off, right? The benefit of not paying income tax on tips might get completely wiped out by losing some of those other credits that are meant to help families who are struggling. It's like a weird domino effect within the tax code.
It really shows how, tweaking one part of the system can have these ripple effects in other places, things you wouldn't necessarily think about right away. Okay, let's go back to the potential for abuse just for a minute.
Yeah.
We talked about people trying to reclassify wages as tips. What are some other ways people might try to game the system? I know our analysis mentions this idea of treating tips as gifts. Why is that a problem, tax-wise?
Treating tips like gifts under the tax code, that's a whole other can of worms. Because right now, there's this annual gift tax exclusion. It's $18,000 per person in 2024. So if tips were seen as gifts, you could have people getting massive amounts of income labeled as tips, and they wouldn't owe any federal income tax or payroll tax as long as each gift was under that limit. Imagine trying to track that. It would be almost impossible for the IRS to monitor and enforce. And it wouldn't be just limited to tipped industries. It could really distort how we tax income across the board.
Yeah, it's starting to sound less like a targeted tax block and more like a potential free-for-all.
That's a good way to put it. Now, what about the employers in all of this? Could this bill make them change how they pay their workers, you think?
Oh, yeah, that's a good question. What's the incentive for them?
Well, if tips become tax-free for their employees, employers might start thinking, maybe we can lower those base wages, right? Rely more on tips to make up the difference. For the employer, that means lower labor costs. But for the workers, that could mean their income's way less stable. Because tips, they can fluctuate a lot. Depends on the day, the time, even how the economy's doing. Stuff that's totally out of the worker's control, and there's no guarantee their total pay would actually go up in the end.
So it's like shifting the risk from the employer to the employee, potentially. Okay, let's zoom out for a minute. Big picture time. What kind of wider impacts could this have on, the economy, even on society as a whole?
Okay, so one of the immediate concerns, economically speaking, is what happens to government revenue, for both federal and state budgets. If a big chunk of income suddenly becomes tax-free, the government's going to collect less in income tax. And that could lead to budget deficits, or maybe they have to raise taxes somewhere else to make up the difference. It's important to remember, this bill only focuses on federal income tax, not payroll taxes, Social Security, Medicare. But, and here's the thing, if it becomes more tempting to underreport tips because they're not subject to income tax, well, that could indirectly affect how those programs are funded down the line.
That's a good point. Those are definitely things we need to think about. And you know what else this could impact? The whole tipping culture. Our analysis touched on that. What do you think? Could this change how we view tipping, even how much we tip?
It's definitely possible. If tips are suddenly tax-free, it might put more pressure on customers to tip, even for services where it's not really expected now. And that could lead to what some people are calling tip fatigue, people just getting tired of tipping for everything. And it would definitely bring back that whole debate about, is tipping even fair in the first place? Should we be relying on it so much to pay workers?
Yeah, it's a really complex issue. No easy answers there. And speaking of fairness, it makes me think about this. Why should tip workers get this specific break when other low-wage workers, those who don't get tips, they wouldn't get the same advantage? It does seem a little uneven, doesn't it?
It does. It raises some questions about what they call horizontal equity in the tax world. The idea is people in similar economic situations should be treated the same way by the tax code. So someone working just as hard, making a similar hourly wage, but in a job where tipping isn't customary, they wouldn't get this benefit. And it's a valid point to raise. Is that really fair? Plus, if a big part of a tipped worker's income is coming from these untaxed tips, it could actually hurt them in other ways. Like, they might not qualify for as much in unemployment benefits. Those are often based on your reported wage income. And it could affect their credit scores, too, because lenders, they usually get taxable income when you apply for a loan.
That's a great point. Those are all real-world consequences that we have to consider. So, given all these potential downsides, are there other ways we could support low-wage workers? Our analysis talks about some alternatives to this bill.
Yeah, there are definitely other ideas out there. Some folks say the most effective and fairest way to help is to just raise the federal minimum wage and get rid of that separate lower minimum wage that applies to tipped workers, what they call the tipped minimum wage. That would give everyone a more solid base income. Another idea is to change the whole tip credit system. That's the thing that lets employers use tips to count towards their minimum wage obligations. And then there's always the option of expanding those tax credits we were talking about before, the EITC and the CTC. Those could give more targeted help to families who are struggling, regardless of what kind of job they have.
So it sounds like there are a few different levers we could pull, different ways to try and achieve that goal of supporting low-wage workers.
Mhm.
Now, let's say this No Tax on Tips Act, it does keep moving forward. Are there any tweaks, any amendments that could maybe reduce some of the risks?
Absolutely. If lawmakers decide they really want to do this, there are definitely ways to make it better. For example, they could set a much lower deduction cap than that $25,000 we talked about. That would make sure the benefits really go to those lower and middle income workers, and it would lessen the temptation for higher earners to, play games with the system. It's also super important to clearly define which jobs traditionally involve tipping. Try to prevent people from reclassifying income in jobs where tipping isn't the norm. And they could put stricter limits on who can even claim the deduction based on income to make sure it's helping the people who need it most. And of course, giving the IRS more resources, more power to enforce the rules would be essential. That way they can crack down on any fraudulent stuff, people trying to misclassify their income. Another idea is to build in a sunset provision. That means the law would expire after a certain amount of time, forcing everyone to review it, see if it's actually working, what the impacts have been. And last but not least, they could try to link this with policies that require employers to pay, at minimum, the full federal minimum wage. No relying on the tip credit to make up the difference. That would help guarantee workers a more stable base income, no matter how much they're making in tips.
Okay, that's a really helpful rundown of potential fixes. So to sum it all up, the No Tax on Tips Act, it's trying to help tipped workers, for sure. The idea is get rid of federal income tax on their cash tips. But as we've seen, it's a pretty complicated issue, right? Lots of potential downsides, especially when it comes to who really benefits and the very real possibility of abuse, people finding ways to exploit the system.
Exactly. I think it's great that lawmakers are looking for ways to support tipped workers. But the way the bill is written now, it raises some big questions like, will it really help the people who need it most? And could it end up hurting our tax system, maybe even the economy as a whole in the long run?
Really important stuff to consider. So for you, our listeners, we've explored the different angles, right? The potential upside, the fairness questions, those risks to the tax system. Now here's something for you to ponder. What do you think is the best way to help those low-wage earners out there? Is it through targeted tax breaks like this one? Or broader changes to how wages work? Maybe expanding those safety net programs. It's something worth thinking about for sure.
And hey, if you're interested in digging deeper, we've got some homework for you. Check out those potential amendments we talked about. Or maybe explore some of those alternative policies, raising the minimum wage, changing that tip credit system. There's a whole lot more to this conversation.
That's for sure. Thanks for joining us on this deep dive, everyone.
Yeah, thanks for listening.